Just sit beside me, okay? No, sit. All right, so good morning, everyone. It's time for us to start on a very, very wet Saturday. So it seems everyone is enjoying, you're all enjoying your break. I mean, the rain at all. So I'm actually in the classroom now with your very, very reliable class governor, Aisha. So both of us are in the class. So this class will just start now immediately online. I've started recording already, so we don't need to waste much of our time again. So there is a question that we're supposed to solve on Wednesday, but I gave it to you guys as an assignment. So I think let's start with that first of all. So I've started recording this. The last questions on IAS 21. Hello, can you guys hear me very well? No, I'm not using my laptop. I'm using Aisha's laptop. Can you guys hear me very well?
Yes, sir.
Okay, there is no other noise. There are a lot of background noise here. Okay, let's just continue. We'll manage it like that. So the questions we will be solving, let's solve this first question. Then we'll move on to the foreign subsidiary. So number one question, I actually gave it to you guys as an assignment, but I don't know how far you guys have gone about it. This is coming as read only. Just can we open this file again? It's coming as read only, so I can't type. Just a minute, so close and open it again. Okay, we are back now. I hope you guys can view my screen. Can you view the screen? The IAS 21. Can you view it? Hello, can you view my screen? No. Yes, Abby. Okay, all right. Let's move on. So the questions goes thus. White Cliff Co. Whose year end is 31st December? White Cliff Co. is the company name, whose year end is 31st December. Buy some goods from Rinka SA of France on 38th of September. The invoice value is 40,000. This should be euro or pounds, and is due for settlement in equal installments on 30th of November and 31st of January. So we're also given the exchange rate, and the requirement is show the accounting entries in the books of White Cliff. So these questions now, if you look at it now, we purchase a goods worth 40,000 euro. Yeah, euro, 40,000 euro. However, the payment will be made on two different equal installments. So the first payment is due on 30th of November, and the second payment will be due on 31st of January. So if you check now, there is a reporting date in between November and January. So what it means is that whatever liability that is left as at 31st of December, you need to revalue the liabilities. So that is exactly what we need to do now. So let's start now. So the first thing is on initial recognition. On initial recognition, okay, there is a purchases is how much, please? Right, that's the 40, Abby. I don't know whether you guys are following. Purchases is 40, correct? It's 40. So the date of initial recognition, that is the date of purchase, and this transaction occur on 38th of September, okay? the purchases happen on 30th of September. So as on 30th of September, the exchange rate is 1.6. So we need 1.6 euro to be able to arrive at $1. We need 1.6 euro to be able to arrive at $1. So what this thing simply means is that in the context of this question, dollar is superior. So that means you are converting from a weaker currency to a superior currency, to a stronger currency. So the implication is that you need 1.6 of this euro to arrive at $1. So that means you have to divide, correct? You divide. So what's the answer? If you divide 40,000 by this, what's going to be the answer in dollar? Guys, are you following me, please? So what's the answer in dollar? What's going to be the answer in dollar, please? We are just starting now. 25. Hello, 25. Okay, $25,000. That is our answer in dollar. So the entry is what? You debit your purchases. You debit your purchases. That's 25. You debit your purchases, 25, and you credit your payables, 25. So this is the answer. This is what you do on initial recognition. So the initial recognition is on 38th of what? September. Then we are now told that the invoice was settled or is due for settlement in 2 equal installments. So the first settlement occur on 30th of November, right? So the initial recognition is 30th September. So the first part payment occurred in November. So we have the first part payment. The first part payment occurred on 30th of November, right? Guys, you can unmute so that we communicate. So you can unmute, please, so that we communicate.
Yes.
Guys, do you want to join here so that we can all flow together? Let me stay in the middle. I have more people in the class here with me. So someone can come through. You can come and sit here. So I have more people in the class, so I want them to join. Welcome. All right, so let's move on. The first payment occurred on 30th of November. Remember that the payment that we paid on 30th of November, they said it is half, Abi, because they said that we settle it on 2 equal installments. So that means what you actually paid was out of the 40,000 euro, what you paid was 20,000 euro, Abi. So the first payment that we made, that's 20,000 euro. So we have payment. The payment is 20,000 euro. So that's going to be what? That will be 20,000 divided by what's the rate at that date? 1.8. So you divide it by 1.8. So that gives us how much? 11,111. So that is what we paid the first half. Now, where the problem is how to pass the entry. So the entries goes thus. So you credit your.
How did you get 20,000 euro?
The total purchases is 40,000. Do you agree with me?
Yes.
And they said that you settle it in equal installments, 2 equal installments. That is in November and 31st of January. So what is implying is that the first installment, that's going to be 40,000 is the liability, right? Divided by 2, that's 20. So you settle the first one on 30th of November. So that gives you 11,111. So your entry is this. Sir. You credit your bank. 11,111, right? Then who can tell me how much you have in your payables for this particular liability? How much do you think is standing in our payable, the dollar amount for this liability? You know it is half. So how much do you think is in our payables? Guys, you can talk. And if you guys want to speak, please speak. The last one, first one. The one we saw on Wednesday. So how much do you think is the payables now for this dollar? Does anybody have an idea? We are only settling half. We are settling half of the liability. Remember, hello, you know, the total dollar liability is $25,000 after we have translated it, right? Now, we are settling half for 11 what? 111. So what will be the equivalent payable of that half? It will just be 12,005 now. Okay, this dollar that you have here is 25,000, right? Abi? 25,000, 25. Is it 25? Abi? 40 divided by 1.6 is 25 now. Okay, yeah. Do you understand, please? Good morning. So 40 divided by 1.6 is 25. Is 40 divided by 1.6 is 25, correct? So you are settling half of it now. So the half you are settling is 12,500. Yes. That is the half that we are settling, right? 12,500. So if you settle half, if you can see it, or if you want to join online, you can use my phone, that big phone. But you'll be hearing my voice only. I think somebody sent a message. Let me see. Can you hear me clearly now? Lua from Milola. Can you hear?
Yes, sir. Yes, sir.
Okay.
Yes, sir.
All right. So if you settled half, so that means there is going to be an exchange what? A liability that worth 12.5. You settled it for 11,111. So what do you have? There is an exchange what?
Exchange
Gain. Yeah. So P or L. Can you see? Yeah. Exchange gain. Exchange gain. How much is the gain? 1389 like this, Abi.
Yes.
So now, hello, are you with me, guys? Are you following? So we have done the we have done the first settlements now. We have done the first settlements. So we have done the first settlement. The first settlement has been done. So 30th of November. Now, if you check now, the second settlement occurred on 31st of January. The second settlement occurred on 31st of January. So if the second settlement occurred on 31st of January, that means the outstanding liabilities that we have, we need to revalue at year end. Okay? Now, the outstanding liability that we have is, you know, the total liability was 40,000 euro. Now, we have settled half of it. 20,000 euro has been settled, Abi. So the outstanding liability will now be what? The 20,000 that has not been settled. That is the outstanding liability. The 20,000 that has not been settled is the outstanding liability. So we have the closing balance. In case you are not seeing it clearly, you can use that phone there. So I can be looking at it from the phone. Abi? If you can't see this clearly, you can use the phone. So if I have up to 10 people in the class, then we'll just be using board. I have about 6 now, 6 people in the class. All right. So this is what we have now. So at the year end now, reporting at year end. Reporting at year end. The year end is 31st December. Right? That is the year end. So if you check the outstanding liabilities at the year end, you remember that the total purchases was 40,000 euro, out of which we have settled half of it, Abi. The half of it that we settled is what? 20,000. So the balance that we have not settled is what? 20,000 euros. So that 20,000 euro now, what is the exchange rate at year end?
1.9.
Divided by 1.9. So what is the dollar amount of the outstanding liability? What is the dollar amount?
10,526.
10,526. 10,526. Like this, Abi. Okay. Yeah. Now, you said the outstanding liability at the year end is 10,526. So who can tell me how much are we currently recognizing this dollar amount in our books? This remaining half, how much are we recognizing the dollar amount in our books?
12.
It is 12.5 now, Abi. You know, the total purchases was 25,000, Abi. Out of which half of this 12.5 has been paid, which is this entry, Abi. So the remaining half is 12.5, Abi. So if you are recognizing liability at 12.5, then at the end of the year, it is now 10.526. So that means there's going to be an exchange what, please?
An exchange gain.
Exchange gain, Abi.
Yes.
So exchange is in our book as 12.5. Now we are changing the value to how much now? Who is the person waiting? Is in our books as 12.5. So now the value has reduced. No, you are supposed to pay somebody 12.5.
Oh, okay.
And now you have to pay 10,000. So it is exchange gain. So what is the exchange gain now? 10,526.
774.
1,974. So the entry is this. So you debit your, if it is a gain, that means you have to credit your P or L, right? Credit P or L. Exchange gain. 1,974. Then you debit what? You debit your payables, Abi. 1,974. So this is what you do. Okay. Now we have done the reporting at year end. The last thing is for us to now settle. So they said that the final payment was made on 31st of what? January, correct? So we have settlement date, which is 31st January. The final payment was made on 31st of January. Okay. Now, so how much did we pay itself? It will be the 20,000 divided by what is the rate in January? 1.85, Abi. 1.85. That's how much?
10,811.
10,811, Abi. This is what you pay. So you credit your bank 10,811, Abi. You debit your payables. How much is the payables now that we have for this liability? No, the value at the year end, 10,526, Abi. Then you have 10,526 as payable, and now you are settling 10,811. The difference is exchange loss, Abi. Debit P or L. Exchange loss. You said it's 2 what?
85.
So we are done with this question, ladies and gentlemen. Any questions for me? I'm done. Oh, any question? Okay, you are writing. Right. Where did you stop?
So I've not gotten you.
You have not gotten. Okay, I should start. Okay, let me stop recording so that then I will start the, if I stop, I need to go and take that phone again. Okay, just write fast. Then we'll move on to the next topic. Should I take it from to the beginning for you to write? Okay, yeah, please do it fast. Don't mind, I have people in the class also, they need to write. I will send the soft copies too. Okay, can we just continue? I will send this material to you because of time, Abi. All right. Any questions on this topic before we move on? I should re-explain, Abi. Okay, let's re-explain now. So, White Cliff Co., whose year end is 31st of December. Okay, that's the White Cliff Co. Buy goods from Renka SA of France, Abi. And the invoice value is 40,000 euro. That's the value of your invoice, 40,000 euro. However, the problem here is that you are going to settle it twice. You will settle the payment twice. The first one will happen on 30th of November. And the second one, okay, you are following on your phone, Abi. Okay. And the second one will happen on 31st of January, right? Then we are giving the exchange rates. Now, we are told to show the accounting. The first thing we do is that we need to first of all know how much is the value of the purchases in Naira, in dollar. So that is the purchases that we've done here. 40,000 divided by the rate at the date of purchase, 1.6. So we got 25. We pass our entries for the purchases. Now, the first payment is due on 30th of November. And that first payment is half because you are paying on 2 equal installments. So the first half payment, so that will equivalent to 20,000. You know, the total liability was 40, what you bought. Now you are paying half, that will be 20, Abi. So you now value that 20 as at the rate of payment, which is 1.8. So we got 11,111. So we'll pass the entries, credit it, then your payable will be 12,500. How? The 25,000 that you have taken before divided by 2. That's 12,500, right? So that's how we got our exchange loss. Yeah.
Like it should be 20,000.
No, half of the dollar. You are paying half of this dollar. 25,000.
No, like the payments. You said it's
no, this payment 20,000. Now we have converted it to 11.
Half of the 40,000 was 20,000.
Exactly.
But it wasn't stated in question.
There's 2 equal installments. English. Okay. 2 equal installments. That is half divided by 2 is English, Abi. So you now need to report the remaining liability at the end of the year. So that is what we have done here, right? So the remaining liability is 12. If you have settled 20 out of 40, you will be left with 20. So you report that 20 at year end. So you pass entries for it, Abi. Once you have done that, then you now need to settle the final payment, which was done on 31st of January. So we debit our this thing by 20 and credit our banks, and we credit our banks with the payment and recognize the exchange loss. I hope it's clear now. Okay.
Good morning. And it's due for settlement in equal installments.
And that means 40 divided by 2, half. Any other questions, please?
Sorry, sir. Please, I didn't get the reason why we have to divide when we're converting from pounds to
okay, that's your own query, right? So they said that you need 1.6 euro to get £1, to get $1. Don't think dollar is strong, or euro is stronger than dollar in reality, but this is as per question. So as per question, you need 1.6 euro to be able to get $1. So if you are giving euro, that means you have to divide. The same way naira is so useless that you need about 900 naira to get $1. So you have to always divide naira so that you can get the dollar amount. I hope you understand, Abi.
Okay.
Sure, you understand. Thank you so much. All right, guys. Next topic. Let's move on to foreign subsidiary. So I'm going to explain the foreign subsidiary. So these are what I will explain. Definition, how you translate, translation rule. Okay. After taking translation rule, we discuss the treatment of exchange difference. Then we'll now take case study. So I have 3 case studies here. I plan to solve 2 for you. Dash you 1 as take home. Even though you are still owing me assignments. So those 3 questions, you guys have not solved it. Although I've received like 3 or 4 solutions, but I want more people to solve so that I can spend time on everything together. I don't want to solve one now, then later you guys will disturb me, because I also need to manage my time. If I receive enough, so I'll just spend time and address every solution together. So those that have not done it, you are affecting those that have done it, but because of you, I have not been able to respond to them. Please. And today, I'm going to add 1 more questions to it on foreign subsidiary. There are 3 case studies. I will solve 2 for you. Then you take 1 home, right? All right, let's define what is a foreign subsidiary. What is a foreign subsidiary? So a foreign subsidiary is a subsidiary. A foreign subsidiary is a subsidiary whose activity is located in another country, other than the country the parent entity is domiciled. Okay? Do you understand? A foreign subsidiary is a subsidiary that is located in another country other than a country where the parent is domiciled. Remember that we defined this thing last time. We defined functional currency and presentation currency. Don't worry, that phone, you can use it to watch, or you'll be hearing my voice. So you can, this place you can use that phone to be watching the class. You understand, Abi? Just bend it, you'll be. So we define functional currency as a currency of a primary economic environment in which an entity operates, Abi. E.g., if you are located in Nigeria, your functional currency is Naira, Abi. So any money they are spending in the country that you are located is known as your functional currency. Or do you guys want us to write tests? We'll play with some of these things.
I think so.
Do you want tests?
Yes. Yes.
Maybe next weekend.
What kind of text? What context?
Same test we wrote last time.
ABC.
Fill in the gap. ABCD, ABCD. Do you want tests, guys? Relax you. Hello, online people. Do you want tests?
Yes.
Thank you, Maureen. Maureen, thank you.
Morning is up at me.
Okay, so you guys want tests. Due to popular demand, we are going to have tests next weekend. Online, 30 minutes.
Is it online next?
Online, there will be tests next weekend. Online, 30 minutes. So watch out. All these things that I've been teaching you, I'm going to load it in the test for you next week. Watch out. I'm Ginger. Thank God I'm traveling this week, so I will have time to set your question. There is no online class this week. I will be away.
Okay, Wednesday.
No online. I'll be traveling, so I won't be around throughout the week. I'll be back on Friday. So no online class. So this week I'm not going to disturb you. There is no online class. Then you have a lot of assignment to solve. Okay, and also you have time to prepare for my test next weekend. No story. Thank you so much. All right, let's discuss the translation rule. Translation rule now. I'm going to show some people paper next week. Translation rule. How do you translate? So we are going to discuss how you translate your statement of financial position, popularly known as balance sheet. So how do you translate your statement of financial position? We'll discuss this translation rule for SOFP. Now, how do you translate now? So this is how you translate all assets and liability. You translate everything at closing rate. At closing rate. Okay? All assets and liability, you translate them at your closing rate. Are you with me? All assets and liability, you translate at closing rate. Then share capital and pre-acquisition reserve. You translate share capital and pre-acquisition reserve at your historical rates. Or you call it actual, or the actual rate, when the rate at which the rate that was applicable when transaction occurred, the rate that was applicable when the transaction occurred. Okay, then your post acquisition reserve is your balancing figure. You don't translate, is your balancing figure. So this is a rule that you need to follow for your statement of financial position. This is the rule that you need to follow for statement of financial position. So all assets and liability, you translate them at what? Closing rates. Okay? Then share capital and pre-acquisition reserve. You translate share capital and pre-acquisition reserve at your historical rate or actual rate, the rate that was applicable when the transaction occurred, okay? Then for the post-acquisition reserve, that's your balancing figure, okay? Post-acquisition reserve is your balancing what? Figure. So that is what you do for your statement of financial position. Now, how do you translate your how do you translate your profit or loss? So for the profit or loss, this one is very, very easy. Ategun will throw your umbrella away. Don't mind us, we're having fun in the class. If you're not in the class, you are missing. Let me even turn on the camera. Let's pepper them online. It's not everything that every time you do online, we are enjoying in the class. Can you see us?
You can see us? But I can't see any enjoyment there now. What's the enjoyment there?
See this one, no. See this one, no. You say you can't see any enjoyment. Don't worry. Okay, let's turn on the camera again. Somebody's on her bed saying she can't see any enjoyment. How will you see when you're already distracted on your bed? Okay, all right, let's move on. Okay, yeah, so for the profit or loss, all items in P&L, all items should be translated at average rates. So for the P&L, you will translate everything at average rates. Are you following from there? We are okay. You are following a bit. For the profit or loss, everything should be done at average rate. You do everything at average rate for the P&L. Okay. So having done that, now the next thing I want to discuss now is how will you now treat your exchange variance? Aisha, this material, you can share the PDF. I mean the Word copy in your WhatsApp group. I will not delete it, so you can share it. So this MS Word material, Aisha will send it to your WhatsApp group after the class. So how do you treat your exchange variance, please? So any exchange variance arising from translation, exchange difference, the same thing now, but tautology, same thing. Thank you, my sister. Any exchange difference arising from translation of foreign subsidiary should be recognized in other comprehensive income. You remember that the one of the individual entity, all exchange difference are recognized where? In P&L, but the one of foreign subsidiary, all exchange difference will be recognized in OCI. In fact, that your next week test, I won't do it. Will be mixture of filling the gap and OBJ. No, yes, it will be mixture of filling the gap and OBJ. Everything will not be OBJ. Eh?
No gift.
There should not be gifts next weekend. Why?
Some of us not collect gift last time.
Okay, I'm sorry. All right, so that is it, Abi. So
you give us area of concentration.
I will give you. And now that one is last day now. Anytime about Kingano now, whoever that we are bringing wife or should not be, prognosing, just stretching neck, just stay on your lane. On the last day, I will tell you guys some secrets that will make.
No, for the test, I mean, no.
AOC is whatever we've done from the last test is dealt.
Is much.
And so what? And so whatever we've done from the last test, Madam, I'm nice, Abby. Is that not okay? Whatever we've done from the last test today, and there is no exception. No. I will really be looking out for some people, those that did not participate in last test because they joined us late. This is an opportunity for you guys to shine now. Okay. All right. So I'm done with the story. It's time for us to now solve question, please. All right. Open your study material. Open your study material. Go to case study 8, Rapuya PLC. I want somebody to please, anybody online should please read Rapuya for us. She shared it. Please read case study number 8 for us, Rapuya. Don't read. Let the online people read for us. Sir. Thank you.
Okay.
Oh yeah. Thank you.
Rapria PLC is a Nigeria public limited company operating in the mining industry. The draft statement of financial position of Rapria PLC and its two subsidiaries, Puta Limited and Soma Limited, as at April 30, 2017, are as follows. All figures are assumed to be correct.
Thank you.
I'm using your screen.
Okay, note 1 now. Oh, yeah, continue. This note 1, yeah, continue.
On May 1st, 2016, Rapria acquired 52% of the ordinary shares of Soma Limited, of Soma Limited, a foreign subsidiary. The retained earnings of Soma Limited on this date were 220 million DFAs. The fair value of the identifiable net asset of Soma Limited on 1st of May 2016 was 990 million DFA. The excess of the fair value over the net asset of Soma Limited is due to an increase in the value of non-depreciable land. Rapria PLC wishes to use the full value method, the full goodwill method, to consolidate the financial statement of Soma. The fair value of the non-controlling interest in Soma Limited at May 1st, 2016 was 500 million DFA. Soma Limited is located in Tome, a small country in West Africa, and operates a mine. The income of Soma Limited is dominated and settled in DFA. The output of the mine is routinely traded in DFA, and its price is determined initially by local supply and demand. Soma Limited pay 30% of its costs and expense in Naira, with the remainder being incurred locally and settled in DFA. Soma management has a considerable degree of authority and autonomy in carrying out the operations of Soma Limited and is not dependent upon group company for financial support. The finance controller is not certain from the above whether the DFA or Naira should be. Sir, please. Thank you, sir. Should be taken as the functional currency of Soma. There have been no issue of ordinary share and no impairment of goodwill since acquisition. Note 2. Also, on May 1st, 2016, Rapria PLC had acquired 70% of the equity interest of Puta Limited. The purchase consideration amounted to 226 million, which Rapria PLC paid through bank transfer in compliance with the cashless policy of the federal government of Nigeria. The fair value of identifiable net asset recognized by Puya Limited was 240 million, excluding the patent below. The identifiable net asset of Puta Limited at May 1st, 2016 include a brand which had a fair value of 8 million naira. This had been recognized in the financial statement of Puta Limited. The brand is expected to have a useful life of 4 years. The retained earnings of Puta Limited were 98 million, and other components of equity were 6 million at the date of acquisition. The remaining excess of the fair value of the net asset is due to an increase in the value of non-depreciable land. Rapria PLC wishes to use the full goodwill method in consolidating the financial statement consolidating the financial statement of this subsidiary. The fair value of the non-controlling interest in Puta Limited was 92 million on 1st of May 2016. There have been no issue of ordinary shares since acquisition, and goodwill on acquisition is not impaired. The following exchange rates are relevant to the preparation of the goodwill of the group financial statements. Use mine. Okay. On May 1st, 2016, we have DEFA to Naira 3:1. April 30th, 2017, we have 2.5:1. Average of the year to April 30th, 2017, 2.9:1. Required, advise the financial controller on what currency should be taken at the functional rates of SOMA, applying the principle set out in IAS 21. The effect of changes in foreign currency. Prepare a consolidated statement of financial position of Rapuya Group as at April 30th, 2017, in accordance with the International Financial Reporting Standards. Show all workings.
Thank you so much, Maureen. Thank you. So, the A part of the question, that's talking about the functional currency. So, you can attempt that on your own. So, I'm much interested in the foreign subsidiary, which is the B part, where we were told to consolidate. Okay, I have two people waiting. Let me admit them. So, the A part of the question is not. All right, so let's treat the foreign subsidiary, which is the most important part. So, we're still going to follow the same principle that we are used to in group. All right. So the principle is for us to first of all sketch out our skeleton. So I will do that right away. The name of the parents is known. Rapuya PLC. Should I solve it in IAS 21 or I should open a new MS Word? You can solve it the same. It's the same now. It's so different. You will name it, Abby. She'll take that. She'll
Just name the other.
Okay. So we have Rapuya PLC. Consolidated statement of financial position. As at when, please? April 30th, 2017, Abi. So this is the name of the parent. April 30th, 2017. So we have the assets, the non-current assets. Please, guys, join via your device, or if you can sit with somebody. Okay. Non-current assets. We have PPE. Then investment will be replaced with goodwill, Abi. Then we have what? Financial assets. Oreoluwa Keton, has joined. Then we have the current assets. Then followed by equity and liability. Equity and liability. So under equity, we have share capital. We have share capital. Okay, followed by reserves or retain any, then followed by other components of equity. Then you will introduce your non-controlling interest, right? Then we have the non-current liabilities. We have the non-current liability followed by the current liability. So that's all. Now, so that is all. That is all. So let's start with the workings now. Okay, workings. So if you look at the notes now, let's look at the workings now. So they said that Rapuya PLC, a Nigerian publicly. Hey, data is getting low. And I refuse. Okay, it should be enough. Rapuya PLC, a Nigerian public limited company operating in the mining. So the company have two subsidiaries. The subsidiaries are Puta and Wo and Soma. First of all, let's get the percentage of shares acquired by them. So if you check note 1 now, we are told that 52% of summer, Abi?
Yes, sir.
So let's take that one first. Okay, acquisition, analysis or so. So we have Rapuya in summer. That's how many percent? 52%, Abi. Then let's check the next acquisition. So the next acquisition should be in note 2. Note 2. They said that in note 2, they said Rapuya acquired what? It acquired 70% of Puta. Abi?
Yes.
Rapuya acquired 70% of Puta. How many percent?
70.
However, this summer is a foreign subsidiary. Okay? Why? Because it is located, let's read the note 1 now. Back to note 1. They said on 1st of something, Rapuya acquired 52% of the ordinary share of Summer. Okay? A foreign subsidiary. So Summer is a foreign subsidiary. So whenever you see a question on foreign subsidiary, the first thing that you need to do is to translate the account of the foreign subsidiary from their foreign currency into your own presentation currency, right? Based on these questions now, Summer is preparing the account using what? DEFAS. So we must translate the account from DEFAS to what? To Naira. Because Naira is the currency that we, the parents, are using. However, the foreign subsidiary is using DEFAS. So we must first translate the account from the DEFAS to what? To Naira. That's the first thing that we need to do now. So the account of Summer, we will repeat everything now and translate. So let me show you how to do it now. Following the rules I discussed earlier on. So translation of Summer account, Summer financials from DEFAS to what? To Naira, Abi. Now, you will pick, you know, currently, Summer, the accounts are prepared in DEFA. You have your DEFA and it's a million, Abi. Then you will now introduce your exchange rate. Okay? Then you bring in your NGN. Naira is in what? Millions too, Abi. So this is what you bring. Now, go to the financials now. Everything that you have for Summer, you need to bring them out, such as, so let's go to it now. So the PPE of Summer is 760, Abi.
Yes.
You bring it out. Financial asset of Summer is how much?
100.
100. You bring it out, Abi. So let's start now. PPE, we have
Sound system.
property, plant, and equipment. How much is the PPE?
Sound system.
Remember, it is DEFAS alone. We will translate later, Abi. Financial asset, how much? 100. So this gives us how much?
860.
Eh?
860.
860. Abi? Then we have current. Current asset is what? 660. 660, Abi?
Yes.
So how much? The total. The total is what? It's already given. 1520. Then we move on to where now? Share capital. How much is the share capital? Followed by other reserve, Abi. How much is the reserve? Now, this reserve, you need to divide it into two. Hello? You divide your reserve into two. There is pre-acquisition and there is what? Post-acquisition. The total reserve is 600, Abi. However, so can you check note 1? What was the pre-acquisition reserve when you acquired Summer? Read it from the note 1. Madam, you don't have question.
20 million.
Eh?
220 million.
Online, you are getting it, Abi. When you acquire Summer, your reserve was 220, Abi. I hope online people are with us too. The people in the class, they are moving with us so fast. Okay, how many people do we? So I have about 16 minus 2, about 14 people that instead of them to be in the class with us, all of them are on their bed, drinking tea and coffee.
Size levels.
Yes, hey, borrow. So the people that are in the class, they don't get level. All of us don't get levels, Abi. Don't worry. We'll go come out all of them now. We'll continue our lecture in the class. Then you now tell me whether there is levels or not. We will just yank all of you off online now. Enjoy yourself, Jerry. I hope you guys are still coming to class today, Abi.
Yeah.
So 220 is the pre, Abi.
Yes.
The total retained earning was 600 as per question, Abi. If your pre is 220, what will be the post? I make it asterisk so that you know it's 380, Abi.
Yes.
Abi. So you don't even need to total it, just continue. Then you pick your non-current liability is how much?
320. 320.
320.
Yes.
Then what about current liability?
200.
200, Abi. So can you total it will be the same 1520, Abi? 1520. Like this.
Yes.
So this is what we have done, Abi. Now it is time for us to now translate all these things. So based on the principle, all assets and liability must be translated at what rate, please?
Closing rate.
All assets and liability must be translated at closing rate. Now, can you tell me the closing rate as per the question? What is the closing rate? Closing rate is the rate applicable at the reporting date. So the reporting date as per this question is what? Is 30th of April 2017. So what is the rate as at 30th of April 2017?
2.5.
Wait. Let me check myself. Oh, what's it? I don't see the question. Okay. 2.5 differs into 1 naira.
Yes.
So we have 2.5. So exchange rate is 2.5. 2.5. All asset and liability. So just watch me. Watch me. This one too is asset. So I will come back to current assets. 2.5, Abi. Then share capital, Uncle. What am I going to use for share capital?
The actual rate.
Historical rate, Abi. So you will skip share capital and your reserve. Then move on to non-current liability. It's also closing rate. 2.5. Now, the principle is for the share capital and the or let me show you the notes in case you have forgotten. Read the note again. The share capital and pre-acquisition reserve, you will translate them at historical rate. That is the rate that is applicable when the transaction occurred. So in this case now, what is the date of acquisition?
May 1st.
May 1st, Abi. So what's our exchange rate as at 1st of May? 3 what? 3:1, Abi. Three ratio 1. Sorry, I'm not using my laptop. I'm using your governor's laptop. So I'm trying to understand something. 3.0. 3.0. So your post, nothing will be done here. Make it blank. So how do you now translate now? You need 2.5 differs to get 1 naira. Are you going to multiply or you divide? You need 2.5 differs to get 1 naira. You will divide now. You will need to divide to get the naira. So can you quickly divide for me? 760 divided by 2.5.
304.
304. The second one,
40.
40, Abi.
Yes.
Total it's 344, Abi.
Yes, 344. Yes.
344.
264.
60 divided by 2.5.
264.
64, Abi. Then total it.
608.
608.
608.
Is it 628 or 608? 608. Now 400 divided by 3.0. 133.33. What about this one? 220 divided by 3.0.
73.33.
73.33, like this. Leave your post alone. Do what is not current liability. 320 divided by 2.5.
120.
128, Abi.
Yes.
Then what about
80.
80?
Yes.
So, can you, okay, do you know what you will do? The total is 608.
Yeah.
Hello? The total for the total asset is 608. Repeat the 608 here. Then you will now add up, you will now subtract 133, 73, 128, 80 from 608. Whatever differences you have is your post-acquisition result. Do you understand, Abi? 608 minus all those things up there. So the difference.
193.34.
193. No, check 193. 0.34. I want somebody to confirm again.
It's correct, sir.
608
minus
this plus 173. No,
no. 6 including 128 and 80.
It's correct. 193.34.
Thank you, our online auditor. Are we together, please? Post-acquisition reserve is your balancing figure.
Okay.
Eh?
This. All the assets, all the reserves, all the.
Thank you. So, yes. So now that we have done the translation now, the next thing is to also calculate goodwill. So, computation of goodwill on acquisition of, do summer first. Summer is 52, Abi.
Yeah.
Do summer first. Okay. Now, how do we go about it? So you have the DEFA. You will calculate the goodwill both in the foreign currency and in the Naira currency. So this is how it goes. So now let's start. What is the purchase consideration? Yes. You are given in DEFA, Sabi. Look at the investment in summer. No, did they give you Naira or?
Investment in subsidiary.
Investment in subsidiary. You are given, Abi.
Yes.
One what?
184.
184.
Yes.
Abi. 184, Abi. Now, the purchase consideration was paid at the date of acquisition, right?
Yes.
And what was the exchange rate at the date of acquisition? It was 3, Abi. So can you walk back to give me the DEFAs now? That will be times 3, Abi.
Yeah.
How much is it? 55552, right? Then in the question, are we using fair value method or proportionate share of net asset method? Fair value, Abi. So we have fair value of NCI. Did they give us?
Yes.
DEFAs.
Yes.
Let me read the question. Let me read the question again. They gave us the fair value, Abi. As how much? No, the fair value of identifiable asset. No, not that one. I need the fair value of NCI.
500 million.
500 million.
I need. The fair. What happened? Who is the person calling me now? Go. Why are you calling me when I'm in the class? One of you is calling me. Who is Glory? Glory, Grace, or somebody? It's in your class. Person calling me. I will not disrupt the network. Okay. Do you understand me, please? The fair value of NCI, it was given as 500, Abi. Eh?
Yeah.
So let's move on. 500, like this. So can you give me the Naira divided by 3.0? Madam, how are you joining us? How do you want to join?
167.
Eh?
166.6.
166.67, Abi?
Yes.
Okay. You are from DEFAS to Naira now. So what's the total? What's the total now?
This one is 350.67.
This is 1052, Abi.
Yes.
1052.
350.67.
3.67. Abi?
Yes.
So if we have this now, so the next thing is, what is a share cap? So assets acquired now. Assets acquired. Assets acquired. What's the share capital? What's the share capital? Hello, online people, are you following? My online, are you with us?
Yes, sir.
Because my network disappeared for a few seconds, so I wanted to confirm. Okay, what is the share capital of the, you call everything? It's even on the screen here. That's 400, Abi. 403.0 and what? 133.33, Abi.
Yes.
Okay. Then what is the pre-acquisition reserve?
220.
220. Sorry. And what? 73. Okay. Then we were given the total. Sorry. We were given the total identifiable asset as how much?
990.
Look at the second. They said the total identifiable asset is 990, Abi. Then, sorry, what is the reason for the difference? Non-depreciable land, Abi. Madam, you need water? Huh? Pele. Take water. So we have land, Abi. So anyway, whichever way, everything will equal to 990, Abi.
Yeah.
990. So can you give me the difference? 400 plus 220 minus 990. 370, Abi. 370, 3.0. Divided by 3.0 is what?
123.33.
123.33. Like this.
Yes.
Okay. So this is what we have, Abi. So what's the difference? What's the total, please?
Of the other one.
The total of the other one, yeah.
329.99.
329.99, Abi.
Yes.
329.99. So next thing is, what is our goodwill? You know, goodwill will be 1052 minus 990, 350 minus this one. What's the goodwill?
That's 62. 62.
62.
Yeah.
Then this one called
20.68.
20.
68.
20 point what? 68. Are you sure? Is that correct, everybody? Sorry. Goodwill at acquisition. Okay. So this is what we have, Abi. Now, hello, everybody. Do you understand enough for this point? Pele? We have two more things to do before we move on. Is this clear to everybody? Now, the question we are working on is foreign subsidiary. Listen. The questions we are working on is foreign subsidiary. So the goodwill that we have arrived at is at the date of acquisition. Likewise, the land too. The land that we also arrived at is at the date of acquisitions, right?
Yeah.
So the date of acquisition, the exchange rate was 3.0, Abi.
Yeah.
But at the reporting date, the exchange rate at the reporting date is what? 2.5. So you cannot report that goodwill. Sorry, the goodwill that was done as 3.0, you can't report it at the year end at 3.0. The reason is because the exchange rate at the year end is not 3.0. The exchange rate at the year end is 2.5. Same thing goes for land. You cannot report this land at 123 at your year end because the exchange rate that you use for land was 3.0, whereas the exchange rate at the reporting date now is 2.5. So let me show you the workings now. Okay, reporting goodwill and land at year end. Okay, reporting goodwill and land at year end. So for at the date of acquisition, land was how much? 370 at 3 Abi to get 123 Abi. This is land Abi. So 370 at 3.0, it gives us this Abi. Then goodwill also is what?
And you're saying at. That one means it's multiplication.
Okay, at means multiplication, Abi. Yeah. I'm coming. Let me just set it. I will use the right something now. It should be divide, Abi.
Yes.
So at the date of acquisition is this. Land is also what? Goodwill is what? 62 divided by 3. It gives us this, Abi. Yes. So what's the total of the two? The total of the two is what?
4.0.
Total is 144 points what? Okay, this is the value at what? At the reporting date, Abi. Now, what is the value? I mean, this is the value at acquisition date, Abi. So what is the value at the reporting date? You repeat the same thing. You know, at the reporting date, our exchange rate was what? 2.5, Abi?
Yes.
At the reporting date, our exchange rate was 2.5, Abi. Yes. So land will be 370 divided by 2.5, Abi. This one will also be 370 by 2.5. So what is the new value now? 140. Eh?
140.
This is 140 what?
140.
Like this, Abi?
Yes,
24.8. 24.8, Abi?
Total 172.8.
24.8. Okay, this is 148. Then this is 24.8, Abi. Yeah. What is the total of the two?
172.8.
172.8, Abi. Now, hello. So this is the value that you are going to use in recognizing your land and goodwill at the end of the year. You cannot use the initial value because as at the reporting date, the exchange rate was 3.0. But at the year end, the exchange rate is now what? 2.5, Abi. So the exchange rate is now 2.5, right? So the difference is what we call exchange difference. What is the exchange difference now? It will be 172 minus, how much is it?
28.7.
28 point what?
79.
I'm done. This is the only technical aspect of the question. Please, do you understand? And if you don't understand, please, can you speak? Let me re-explain again. Do you understand what I did here? Why can't we use
the date of acquisition?
No, we have already done that now. We recognize goodwill, but we have to revalue it because the exchange rate was not the same. At an acquisition date, the exchange rate was 3.0. But at the reporting date, the exchange is 2.5. So you need to compare the difference and take it as your exchange variance. Guys, are you with me, please? Okay. So the exchange variance now, the entry is this. You know, your goodwill, you will debit your land with how much is the portion for land sale? Land will be 123.33 minus 148, Abi. How much is that?
That's 24.67.
24.67 is land, Abi. What about goodwill? Goodwill will be 20 minus 24. 4 point what?
12.
Right? Is it correct? Okay. How do we arrive at what? Okay, there is 20.68 here. minus the new value 24.8. Do you understand, please? Eh? Yeah. Okay, so that is it. Then you will now credit your other comprehensive income. Then you also credit your NCI. Okay, why am I crediting NCI? Why am I crediting NCI? I am crediting NCI because the foreign subsidiary, it is a subsidiary, right? And anything that will affect the subsidiary must be borne by both the group and the what? And the NCI. That is why I am crediting the NCI. So the 28.79, it will be in ratio 52 and what? 48, Abby. So what is 52% of 28.79?
14.97.
14.97. Then what is the 44% of 28.79?
12.67.
12.67. No, it's not correct. So if you add up this to it, won't give you 28.79. You have done some.
44% of 28.7.
No, it's 48%. Abby? It's 48.
Okay, what's left?
What is left is 48. Hello, online. Are you following?
13.82.
Yes, sir.
13.82. So this is the entries for it. So we are done with the note 1 forever and ever. So who doesn't understand anything yet? So I can explain again. I believe that the translation was clear to everybody, right? Then how we compute our exchange difference too. Well, is that one also clear? Also, how we compute the goodwill on acquisition. Any query before I move on to the next note? The next note is the note. This question only have 2 notes. Oh. Only 2 notes. Query?
This last.
This last one, Abi. Okay. Now, the exchange difference is 28.79, Abi.
Yes.
However, we need to debit land for land own, goodwill for goodwill loan, Abi. Yeah, it's 52% and 48% of the total. So 52, because the parents own 52%, Abi. And this one will be 48%. Abi? Correct? Is that clear? 52
Sir.
and 48. Yes.
So we are dividing it because we are sharing it among NCI and OCI because
parents and
we are using
NCI.
full goodwill method.
Yes.
Because
It is subsidiary. Yes, it is subsidiaries books that is affected. So we need to share it between the 2 of them.
But if we are using a proportionate method, we just take everything to OCI.
No. If you are using proportionate, this is not impairment of goodwill now. The principle you are saying now is applicable to impairment of goodwill. This is not impairment of goodwill. No. Under impairment of goodwill, whenever you're using proportionate, everything goes to POL or OCI. Okay, when you are using fair value of goodwill method for impairment, you have to share. But this one, we are passing entries for exchange difference. And remember that who suffered the exchange difference? Subsidiary. And anything that will affect the subsidiary must be borne by both the group and what? NCI. So that's the principle that we are testing here. I hope that is clear to you, Maureen.
Yes, sir.
Okay, so let's move on to 917. I don't think we can take the second question, Sir Fabi. We should just use this one and close. All right, let's look at the second note. Let's look at the second note. Also on May 1, 2016, also on May 1, 2016, Rapuya had acquired 70% of the equity interest of Puta. The purchase consideration amounted to 226, which Rapuya paid through bank transfer in compliance with the CBN cashless policy. Then the fair value of the identifiable asset was 240. So this one was identifiable asset 240, excluding patents. So the identifiable asset of Puta, I think, included a brand which had a fair value of 8. So that means that 240 does not include this 8. So we have to include that will be 248. Then this has not been recognized in the financial statements. And the brand is estimated to have a 4-year useful life. So we're giving the pre-acquisition retained earning was 98, and other component of equity was 6 at the date. And the remaining excess value is due to increase in the value of land. Then Rapuya, which is to useful goodwill method consolidating, and the fair value of NCI was 92 million. There had been no issue of ordinary shares since what? Acquisition. And goodwill is not impaired. Abi? Goodwill is not impaired. Sorry, are you guys comfortable with what we are doing with the method? If all of you have resumed earlier, I will have just do it on the board. But we're already halfway. Anyway, this will be recorded. It's recorded already, so you can always revisit it as many times as possible. I will try and share the link today. I'll try and upload it on YouTube today. All right, so you need to guide me. I'm switching to the solution. So guide me on this goodwill. Goodwill on acquisition of who? This is Puta, Abi?
Yes, sir.
Or Puta. So what is the purchase consideration?
226 million. 226.
Then what is the fair value of NCI? Guys, speak now line. Fair value of NCI is what? No, it's not. The fair value of NCI is 92 now. We're giving 92. Million. Can you total the two?
318.
318. Like this, Abi?
Yes.
Now, so what is the asset acquired? So ordinary share. Sorry, let me go back to the first note. I forgot to pass entries for land. You know, we got land 1, 2, 3 here. Let me pass entries for it. It's important. So debit land. Okay, now, all right. So call the figure for me. Asset acquired. What is the share capital?
76. 76.
I'm not checking. They are just calling the figures for me.
Share capital. You get 92.
It's in the question now. Last paragraph. 76. Then what about the pre-acquisition reserve of this guy they gave us somewhere?
98.
90 what?
98.
98.
Then they also said other components of equity.
6 million.
Of 6 million.
6.
Yes,
Abi?
Yes.
Then they now said there is also a brand that has not been captured, Abi.
8 million.
How much is the brand?
8.
Our asterisk, because we need to pass entries for it. 8. Then the total identifiable asset was given as how much?
240.
240.
Yes.
So you will need to add that brand to it. Do not be 248. Because they said that this 240 exclude the patent, which is the brand. So that gives us 240 what? 8. Now, what is the difference?
60. 60.
The difference is 60, right?
Yeah.
What did they call the difference? Non-depreciable land. Land 60. 60, Abi? Asterisk, yes. So anything asterisk is a derived figure. 248. So what is the goodwill?
70.
Goodwill is what?
70.
70 like this. Abi?
Yes.
It's correct, Abi. Goodwill. So we need to pass entries. First of all, let's pass entries for the land. Debit land, 60. Credit assets at acquisition, 60. Abi? Then the next one is we'll pass entries for the patent, Abi. For the brand. Debit brand, how much? 8. And credit asset at acquisition or net asset acquired, whichever one you like. 8. Also, they said that this brand has how many years useful life? Is it 5 or 4?
4.
Let's read it again. Let me go to the question and read it. They said this has been recognized in financial assessment. The brand is estimated to have a useful life of 4 years. Okay. the brand have a useful life of what? 4 years. Remember, the date of acquisition is May 1st, 2016, Abi. And the reporting date we are preparing for is what?
April 30th, 2017.
So that means how many years had expired?
1 year.
Adam, are you with us, man? Yes. 1 year, Abi. So we are going to amortize the brand for only 1 year now. Expired years is 1 year. Abi? So let's do that now. So it's going to be it's going to be 8 divided by 4 times 1. This is how much? 2, Abi.
Yes.
So what's the entries now? First of all, you credit your brand, Abi. Eh? Yes. With 2, Abi. Then whose assets are we amortizing? It is Puta, Abi. Yeah. Puta is subsidiary. That means you bear it between the group and NCI. There be group P or L. How many percent did you own in Puta self?
7.
So what is 70% of 2? That should be 1.4, Abi.
1.4.
And this one is 0.6. Am I correct?
Yes.
Eh?
Yes.
So we are done now. We are done. We are done. So let's just prepare our reserve, NCI, and we consolidate, Abi. Number 5, reserve. So let's do our reserve fast. Reserve. So we have Rapuya, Soma, and Puta. So what is the reserve as per account? Check the question for me.
604.
Rapuya is what?
604.
Eh?
604.
604.
Yes. 112.
For Soma, you will call the one. No, some Puta is. Let's use. Wait, let me write Puta first. Puta is 112, Abi.
Yes.
Then what is Soma?
Yeah, changed.
Okay, Soma. Sorry, I'm coming now. Soma. So this one, Puta is how many percent?
52.
You don't chop granules in it.
Puta is 70. Soma is 52. Soma is 52.
Soma is what?
52.
52.
Yes.
So the reserve as per account for Soma, we'll go and check the translated figure in our notes, working one, Abi.
Yes.
We have translated the reserve as what? Pre is 73. Post is, so can you add up the pre and post? 73 and 193. That will give you your total reserve, Abi.
Okay, 266.73.
No, 193.34. Do it again. Otherwise, figure will not match. 73.33 plus 1. Otherwise, the figure will not match. We'll be looking for 1 kobo. If you don't do it well, we'll be looking for 1 kobo. 2 what?
Okay, 266.67.
266 point what?
7.
Now, you now say less pre-acquisition reserve. So what is the pre for Puta? Check the question. 92 or so, Abi. No, I'm not correct. What's the pre for Puta? Let's check the working tool. We've done it. 90 what? The pre for Puta is 98, Abi. Then what's the pre for Soma? Is in the translated figure, Abi. The pre for Soma here is what? 73 point what? 73.33. So now we need to arrive at the post. What is the post acquisition reserve?
14.
Eh?
This one is 14.
Which one? This one?
Yes.
Then what about this one?
193.34.
193.34. The same thing that we got, Abi.
Yes.
My people online, are you with me? Oh,
Yes, sir.
only Maureen is speaking. Let me check what is wrong with others.
Yes, sir.
Yes, sir, we are here.
I can hear you, Esther. James Oyesi, are you with me? Jewo?
Yes, I'm with you, sir.
Who else again? Should I look for you? Okay. Favor, where are you going? Okay, let me check. Omolola Ajayi, are you with us?
Yes, I'm yes, sir.
Okay. Oreoluwa Kiton, my favorite name. Are you with us? Don't be jealous. I like that name.
Ye-
Huh? I can't hear you. Are you with us?
Yes, sir.
Ah, this one. You can see the way everybody was laughing at you. Now we are still lying down on your bed. It's fine. No, there is God, and we are in the class there. Under the cold and everything, Abi. Cold weather. We are here in the class. Last person, Abiodun Suleiman, are you with us?
Yes, sir. Yes, sir.
This one don't wake up. Okay. Okay. So we have share of post acquisition reserve. This recording will be long. I've done about 1 hour 39 minutes. I will share load it on YouTube. You can watch it. It is me that will use my data. Abi? Oh my God. I already have over 1 hour 34 minutes now. Okay. So share of post. Let's share Puta. Puta is 70%, Abi. How much?
9.8.
9.8. 9.8. What about Summer? Summer is 52%. 100.54, Abi. Now, check the workings from the beginning to the end. Anywhere you see P or L, this is the final bus stop. I can see one on top of me, Abi. This one is brand, Abi. Amortization of brand. How much? 1.4. Abi? Now let's go. Let's go one by one. We must not miss anything, no, eh? We must not miss anything. Yeah, no P or L here. OCI Lanimbi. Anyone call? I think that is all. Abi? We are done. So can you total for me, please? 604, 9.8, 100, and 1.4.
5.74.
715.74. Abi? Okay. Now we have other component of equity too. Any issue? Any issue, sir? Okay. Other component of equity. Other component of equity. So we have Rapuya and only Puta. Summer does not have, Abi. So what is as per account for other component of equity? As per account?
14.
14
and 8.
14 and what?
8.
14 and what?
8.
8. Then what's the pre? For who?
6 for Puta.
For Puta, 6. Abi?
Yes.
Then what is the post? Post is 2, Abi.
Yes.
Post is 2. Are you with me? The post is 2. So you do share of post. Bring it here. What share of post? That will be 70. Abi. 70 of 2. Huh?
1.4.
1.4. Now, is there anything we are supposed to take to other component of equity? There is one, Joe.
Which one?
Exchange something.
Okay.
Where is it? 14.97. See it? Huh? 14.97. So done.
Okay, other comprehensive income for both.
Yes.
There's another one.
Where is it? No, this is the only one we have, Joe. 14.97. Exchange difference. All right, total for me.
30.37.
30.37. Like this, Abi?
Yes.
Okay. So working 7, last but not the least. NCI. NCI. I'm sure Joro phone. And I'm supposed to reset it. Oh yeah, I've done a Joro. NCI, Abi. We have Puta and Summer. So what is the
30 and 48.
This is 30% and this is 48%. Sorry. So what is the fair value of NCI in Naira only? For Puta, let's check the goodwill. Puta is what? Yeah, the fair value of NCI of Puta is 92.
92.
What about Summer? See, 166.67. 92. 166.67, Abby. This one is 92. This is 166.67. So what is the share of post acquisition reserve? So let's go to that reserve. So 70, it will be 30% of 14. Abby, for Puta. 30% of 14 is how much?
4.2.
Eh?
4.2.
4 point what?
4.2.
What about Summer?
92.80.
Please, guys, this foreign subsidiary, I'm suspecting it for this diet. So it's one of my AOC. It's not hard now.
It's just a translation.
In fact, I will solve one more question for you now. When we are done with this, we'll do one more.
Today?
Yes. So that you will master it very well. If the next one will be solving now, it will be going so smooth.
Mama, good.
What is it? Then, since you will not be writing now, I will, once I'm done, I will start the next one. So that I want you to master it, then you will now take one home as an assignment, making 3 case study. So we are share of other comprehensive income. That is only applicable to Puta. So what is 30% of 2, Abby? This 2.
0.6.
0. What? 0.6. So is there anything we are supposed to adjust to NCI in our workings? Let's check it. Are we supposed to adjust anything to our NCI in our workings? I'm checking. Amortization, Abby, 0.6. Abby? Wait. We made a mistake. This exchange difference that we had did we add it to reserve? Is it a loss or we made a mistake now? It is for me. Amortization is a loss now. We're supposed to deduct. You get? Hello? Amortization was supposed to deduct. And we are having, yes. 714 point what?
34. 34.
0.34. I think we also made the other comment of equity here. This exchange difference, is it a gain or loss? It's a gain, Abby. So we are correct. Okay, amortization. Let's check anything to NCI again.
Supposed to be in brackets.
I'm coming. So there is another NCI here. We are to credit is again, Abby.
Yeah.
13.82. Is in bracket now.
Okay.
13.82 is again. So please add up for me. Add up.
0.02.
Wait, so you said the answer is what?
0.02.
It's for summer. You are correct, ma. So this one is what?
6.2.
How much?
96.2.
96.8. Abby?
Yes.
Then what about the second one? Summer.
$273.29.
273.29. So what is left now is for us to solve, for us to balance the skeleton, Abby. All right. How did you see this question?
You can do the translation correctly, I think.
Calculate
Okay, you want to recalculate it, Abby?
yes, that is, I think it's 96.2.
Okay, let's do it again before we balance the account, Abi.
0.2.
It's 96 point what? 0.2, Abi?
Yes.
Okay, can you add up the two? Add up the two.
That's 369.49.
Like this, Abi?
Yes.
Okay, let's balance the account. So PPE. Oh yeah, bring out your question. PPE 740
Plus 220.
220 plus 760. Abi, we have plenty land. Land is everywhere. Oh yeah, let's check. Hello, let's check. Oh, hold on. Number 3 first. We need to debit land. 123.33, Abi. Let's take it one by one. 123.33. Abi, let's go. Let's go like
60 is for DEFA.
Eh?
You're not using translated amount. The 760 you added is in DEFA. You use it.
Error. We don't chop Gario. The one for DEFAs, you are supposed to use the translated figure. Thank you so much, my brother. What is the PPE for DEFAs translated? It's 304.
Yes.
Yeah, you are very, very correct. 304, yes. Thank you so much. We don't chop beans. It seems some people are hungry in the class. So like this, then we've done the, we've done the land, the 123, this one is done. No, hold on. So we'll debit land again, 24.67, Abi. Hello, this one, 24.67. We'll take it. What have I done? 24.67. 24.67 plus, let's move on. We still have many entries. So we have done this one. Let's move on. Where are we now? There is another land here. 60 plus 60. And I think that is the final. Plus 60. Plus 60. So how much? 1472. Hello, are you with me?
Yes.
1472, Abi. Now, we have a brand. Is 1472. Is that the final?
Yes.
We have a brand. So you will call it intangible assets, brand. You know, there are two types of tangible assets. We have the one that has finance and in finance, right? Example of the finance is brand, Abi. You bring it. Then goodwill is the in finance, Abi. So both are intangible. Now, brand is, we have 8, Abi. 8 minus 2. Am I correct? Do you understand how I got 8 minus 2? 8 is the, let me show you. So I don't look as if I'm rushed. The brand, 8 is the main one we got. Then we now amortize 2, Abi. So 8 minus 2. So brand is what? 6. So let's do goodwill now. Let's do goodwill. So the goodwill on acquisition, it was 20.68. Abi. Then we now pass an entry that we need to add 4.12 to it. Are you with me? So this 20.68 is the goodwill on acquisition, Abi. Then there is an entry that we should add additional 4.12 because of the exchange gain, Abi. So we have 20.68 plus 4.12. 20.68 plus 4.12. How much? 24.8. 24.8. Can you total, please?
1502.8. 1502.8.
1502.8. Financial assets, all this one, nothing there. So what you would do for financial assets is 30 plus 14 plus how much is it translated for summer? Is 40. Abi? Sorry, 1 minute. 84, Abi? Okay, sorry, I'm coming on. Let me just finish this section, then I'll answer you. Total it.
1586.8.
86.8. Yeah, ask me your questions, please. Didn't we consider total goodwill? I thought we've done now. Okay, the total goodwill, we got it after, Abi. Thank you for that. 70, Abi. You are correct. 70. So do plus 70 to the goodwill. That's puta.
$94.8. 94.8.
94.8. So we had everything. $1,570. Abi? 1,572.8
yeah.
plus 84.
1656.
1656.8, Abi. So current assets, I don't think there is any adjustment, Abi. We have 236 plus 236 plus 14. Eh? No. Translated figure is 200, Abi. So how much is this?
2106.8. No, the total.
No, the total for this three is what?
450.
450, Abi. So add up, what is it?
2106.
Sir, it's 264, not 200.
It's 264 now.
Which one is 264? 264.
Yes.
So the total is what?
700.
700, Abi. Madam, your calculator is?
That's what I'm saying. Like the puta is 200.
It's 236 plus 200.
Yeah. Plus 264.
So it's 700, Abi. So what's the final? What is the final?
2356.8. 2356.8.
Like this, Abi? Eh?
Yes.
Okay, so what's the share capital?
316, 76.
No. Why are you adding 76 now, madam? You be an member.
Okay, share capital.
What's the reserve, Joe? 714.34, Abi? 714.34. Then other component of equity. 714, Abi? Which one is 712? Sorry. The reserve is 714.34. The total. Sorry.
7. Okay,
Working 5. Then other component of equity is 30.37, Abi. Maybe you're allergic to something. Pele? So this one is 30.37, Abi.
Yeah.
Like this, Abi.
Yes.
Ordinarily, everybody's supposed to be in the class now, but many people are still online. Total.
1060. 1060.71.
0.71, Abi. Pele? What is the non-controlling interest?
If you add
The what?
you said organization of branch should be deducted. We deducted it.
Reserve, Abi. It's supposed to be what?
71.9.94.
712. Like this, Abi. Hey, if I can't see about balance, Taloma are responsible. 712, Abi.
Okay, 712.94.
If this account no balance, who should do the responsible?
Rebecca.
Why is it Rebecca now? Leave Rebecca. All right, what's our non-controlling interest? 369.49. It's 49. Abi, or do you want to do it again? Add it up again. I don't want to be looking at for figure.
Rebecca will give us the money.
It's 49. 369.49. 369 point what? 49. I don't want to be looking for figure.
So that means this will change.
369.49. Which one will change? Yeah, do it now.
That'll be 1059.
1059.
Point
What?
0.31.
0.31. Abi?
Yes.
So add up now. Add it up.
1428.8. I check it.
1428.8
28.8.
like this, Abi.
Yes. It's correct.
So what's the non-current liability? 370
Plus 154.
plus 154 plus
What's the conversion?
the translated one for
That's current now. We have
non-current.
non-current. 112.
Okay, non-current is 112.
Yes, 84.
112 plus 84, then translated one for how much translated one? 128.
That's 324.
Eh?
324.
324. What about the current?
370.
Eh?
370.
Plus
154.
154.
Plus 1.8.
80. So total is what?
604.
Oh yeah, let me go on fasting and prayer for this account to balance.
It's balance 2356.8.
Eh?
2356.8.
2356.8. Let's check the other one now. Is that what we got?
Yeah.
2356.8. Is it matching? Thank God. Can we take one more question, everybody? Let me stop the recording of this one. It's too long. I have about 2 hours recording already. Can we take another question, everybody? Hey, I can.